Good morning. How's everybody doing? First, I'd like to say thank you to my sponsor, which is coffee. Good morning, coffee. Okay, I am wearing the red hoodie for one reason only, because look at this S&P 500. This is the second time in September where the stock market has taken quite a plunge. But, you know, this is also a great opportunity to buy some stocks. There's two positions I want to buy today because they are currently lower. One actually happens to be the ETF, the Vanguard ETF, VFV, that is following the S&P 500. So it's now below $100. So let's scoop up some of that. Another one, which I'll show you in the spreadsheet, is one that it's gone up in price, so it's doing very well for me. But it's time to kind of put more money into it, and I've just been waiting for the price to kind of go down. So this is the time to do it. So let's get on with that. But first, introductions. Hi, my name is Steve Coleman. I am a dividend stock investor. I am recording all these videos to kind of record my journey to show you how simple and easy it is to just weekly, over the months, just grow your money. I'm putting $150 into a tax-free savings account. I'm using the Wealthsimple Trade platform because it is zero commission. So every dollar I put in, I'm keeping. So I love that. I love it. You'll love it too. Link in the description. Sign up. There's a promotion going right now. If you put $100 in, you get two free stocks. Two free stocks, I believe, is the current promotion. You get two free stocks. I get one. I forget how. Anyways, it's a good deal. Good deal. Let's get over to the spreadsheet before I start babbling more and get all tongue-tied. Okay, here we are in my spreadsheet, which I've created to keep track of all the different activity that's going on in the account, keep showing the current value of my account, show how much monthly dividends on average I would be receiving, my yield on cost to kind of show me overall how well I'm doing with my investments and how much return I'm getting. I'm keeping track of all the dividends I've received. By the end of this month, I should receive a few more to pump up my September numbers, so that should be probably over $16 quarterly. So, and then also here shows the distribution of my stocks, the diversification of the stocks there. So right now you can see, so one of the ones that I said I'm buying is Vanguard. So it is currently below the 7% threshold that I'm trying to kind of even these all out. And the other one I'm going to look at is Aecon. So right now it's 4.2% of my portfolio. So it's low. So it's very on the low end. So I need to bring that one up. And today seems like a great day to do that because, it's down. So if I head over to my tax-free savings account, so normally my methodology that I go through when I'm picking which stocks to purchase, I kind of start at the bottom. I kind of sort this by unrealized gains, losses. I'll just click on that right now to do it. And then I see where the opportunities are. So right now, Brookfield Renewables, I bought them at quite a high. So I've lost a bit of money on them, but we're holding for the long term. This will recover. It's come very, very close to it, but obviously right now everything's down. Thank you, S&P 500. Not that S&P 500 has anything to do with it, but anyways. So, but it makes up 14% of my portfolio, so I'm not putting more money into here. And then even just following up the list, 7%, 7%, 8% of my diversification. So again, these ones I'm not going to be putting much money into because, I would just be inflating, growing that slice of the pie bigger, and then therefore everything else would start to shrink. So that's where I kind of have to start going up. And then that brings me to really, well, here I've got Interject Renewables, but I'm going to jump up really to Vanguard, S&P 500, ticker symbol VFV, where right now it's below $100. I originally bought it at 90, but it's down below 100, where it keeps growing. So this is a great stock. At the beginning, I said I'm a dividend investor. This is the one stock that is kind of bucks that trend because it only pays a 1% dividend yield. So this one really doesn't match the overall strategy, but it gives me exposure to those US stocks. As well, it gives me then some of that exposure on the diversification front to a lot of the technology companies, the Googles, the Facebooks, the Teslas, which I normally, well, in Canada, we don't have as many technology stocks that pay a decent dividend. You know, we're high on the financials and the utilities. Anyways, and the other one is Aecon. So again, it only makes up 4.2% of my portfolio. So if I were to sort this by like here, like, you know, you can see like these two are down there that really need some support. Anybody who's new, I bought some Canadian National Railroad when fractional shares first came out, just be a bit of an experiment to see how that worked. Wanted to show you guys a video, basically of buying some shares. I think in October, I'll actually receive some dividends from these fractional shares. So I'm just curious to see, is it a fraction as well? So it probably will be. So annually it'll be $1.28. So that's basically ends up being 35 cents that I might receive. So if that's the case, I'm going to do a video update and let you guys know how fractional shares work from a dividend payment perspective. And Diversified Royalty Corp here, which is 4.16% of my holdings. This is a position that I sometimes throw extra money into. So after I've made some purchases today of Vanguard and Aecon, if there is any money left over, since like the average price right now, or the current price is $2.79, I'll put money into Diversity Royalty Corp and just kind of slowly grow that position up over time versus putting one big lump sum payment into there. So it's an easy one to keep growing. So, and get that snowball effect going with the monthly dividend payments that they pay out. That's what we're going to do. We're going to buy some Aecon. We're going to buy some Vanguard. And yeah, any money left over, we'll put into Diversity Royalty Corp. So let me just bring up my cell phone. Okay, here we are. So got the cell phone up. Of course, you can't see that. Anyways, it's up on the screen. So here's my current portfolio. You know, let's just look at all time. You know, 1 year, because I've been investing only since the beginning of February, so 1 year will work. So currently up 3.46%. I've seen this before September as high as 6%. So overall, it's been a great investing journey. Things have been going up here. You can just see, I love the stepping up here effect of just putting that $150 every week. There was a few times at the beginning where I did some huge lump sums in the thousands to kind of really get going. But now it's $150 every week. I actually use the auto deposit feature. So that way the money basically comes right out of the bank account. I don't have to think about it. I just wait for, basically it drops usually, I have it come out on the Sunday and it usually then arrives on the Wednesday, since it still has to have that holding period in between. So great way to just help automate your investing strategy. And so so then 3 months, you know, again, it's starting to go down because September is just turning out to be a bit of a crap month. Because here 1 month, you know, so I'm down almost 3%. So, and then for the week 1, and yesterday 1.1%. So that's okay, because again, you and I are investing in the long term. We're picking some great companies that pay a good dividend, or we know there's solid growth because we have looked a little bit at their financials and we kind of understand that, you know, that this company is going to be around for the long term and they've got a great product that people are going to want. So we're investing in those companies and we're going to be getting the payout is in 10, 20, 30 years from now. So stick around with these videos. You're going to see that it works. So, but all right, let's go and find VFV. So I am going to buy one stock of this. That way I can put the rest of the $150 into Aecon. So the markets haven't opened yet, so we won't know exactly what price I end up buying this at, but, and I'm just, so I can only do a market buy. Well, I can do a limit buy, but anyways, I'm going to do a market buy because I want to get this stock. There we go. Markets are closed. Yep, 5% ceiling. All right, so, and then Acon. Here we go. So yeah, this one, so it's doing okay, this company. It's all over the place, but we're keep building. Building, building, building. So I am going to get, I believe we can get 2 of these. Continue. Confirm order. There we go. I haven't worked with other platforms like Questrade or whatever the other Canadian ones are, but that is so simple. So here's the activity. So here I've put in already the cash that I've deposited. It went in of today, or it's available as of today. So then normally what I would do is then add in the stocks, indicate that, that it was a buy, put the date, the number of stocks I purchased, the price per stock I paid, commission. I put this in there just because it just feels good to put a nice big 0 in its space. So, and then it just totals everything up, updates the spreadsheet over here, and then we can see, how things grow. So, and then the dashboard, obviously this number will change based on the new calculation of how many annual dividend payments we'll receive, and then divide by 12. And yeah, and then we'll just watch the markets today and cross our fingers that it starts to recover, but like not too soon. Let me buy these stocks at a bit of a discount. Let you buy some stocks at a bit of a discount today. So take advantage of it, guys. Take care of yourselves, guys. Have a great day. And, here, I'm going to put some videos up on here. So check it out. One was kind of talking about the fractional shares. And the other one was actually just this book review I just recently did. Give that video just a little bit of extra love. Actually, check out the book as well. So it's a great book. It's a great book. So Wealthing for Rabbits. Wealthing for Rabbits. No, I keep on saying Wealthing like Rabbits. My gosh. Here I thought I was being all clever and actually saying the title correctly. Where in that video, yeah, if you watch it, I kept on saying the stupid book title wrong. And here I am going again. Wealthing Like Rabbits is the book review I did over here. That check it out. Anyways, I gotta sign off. I'm going crazy. Take care, guys. Have a great day.